Hi, welcome to Curious Bricks. In our last video, we talked about Square. Along the same theme of war on cash, today we're going to talk about Mastercard Inc., ticker symbol MA, Q3 2020 earnings report. Mastercard is part of S&P 500 index under the information technology sector. The company's earnings call was hosted on October 28, 2020. Since this is our first time covering Mastercard, we will start with a quick overview of what Mastercard does and how they make money. Mastercard is one major payment network company that facilitates global electronic payment. The company was founded in 1966 as a competitor to Bank Americard, or known as Visa today. Mastercard reported total revenue of roughly $17 billion in 2019. The core markets they serve include consumer credit and debit, prepaid, and commercial. The revenue is split into four groups. The first two groups, domestic assessment and cross-border volume, collects fees on transactions of cards or devices that carry Mastercard brands. These two groups represent over half of the total revenue. The transaction processing group accounts for 1/3 of total revenue, which charges connectivity fees on transactions switched for non-Mastercard branded products. Lastly, the other revenues group is made up on various services Mastercard offers to its customers. As part of the payment network business, Mastercard pays out a large amount of rebates and incentives to its issuers when they meet agreed upon performance thresholds. When it comes to competitors, you will find these familiar names. Visa is the biggest competitor to Mastercard, along with American Express and others. Before we dive into the financial details, let's take a quick look at some key statistics. As of December 4, 2020, Mastercard share price was $344, and its market cap stands at $343 billion. The trailing price-earning ratio is around 51.7. Forward dividend is at $1.60 per share, or 0.46% yield. Now, let's take a look at their latest quarterly financials. We will start with the income statement. In Q3 2020, Mastercard reported total revenue of $3.8 billion, which is 14% lower than the same quarter last year. The revenue decline is driven by a 48% decrease from cross-border revenue. On the bright side, the other revenues deliver a stronger than expected 5% growth. In this quarter, Mastercard improved its operating expenses by 4%, or 8% excluding acquisitions. In summary, Mastercard reported total operating income of $1.9 billion, or 24% reduction from a year ago. Mastercard also published some relevant details in their filings. Over the years, Mastercard reduces its overall exposure to the North American market to roughly 1/3 of its total revenue. In this quarter, we are seeing that this market remains resilient. Mastercard also published the gross dollar volume, or GDV, by payment type. We see growth on debit business, but credit remains weak. Now, moving to the balance sheet. Mastercard increased its cash on hand by $3.2 billion to a total of $10.2 billion, while long-term debt also increased by $4 billion to $12.6 billion. Overall, Mastercard has strong liquidity. In this quarter, the management highlighted that the volume improved throughout Q3, except the travel and entertainment market. Also, the company provided status update on various projects it had with major banks across different regions. Next, the management updated the status of the two M&A deals announced earlier. Finicity is expected to be closed in Q4 2020, while Nets in Q1 2021. Lastly, the longtime CEO Ajay Banga will retire as the CEO and move to the new role of executive chairman. Michael Miebach will become the next CEO of Mastercard. During the Q&A session, analysts were concerned with the near-term outlook for the cross-border revenue. Management pins down the issue to non-intra-Europe market, specifically the travel market. Depending on the success of vaccine and therapeutics, Mastercard anticipates the cross-border revenue to rebound, and personal travel will come back quicker than business travel. Another analyst asked whether the strong growth of the other revenues group will continue. The management responded that consulting services had stronger demand in Q3, and service revenue growth will continue to outpace the core revenue growth. One analyst also asked the spending trend for Q4 holiday season. Based on the October data, Mastercard sees holiday spend started earlier than previous years. U.S. retail sales will grow 2.4% through the holiday season, excluding auto and gas. Home furnishing market remains strong. Athleisure, clothing, and electronics will outperform. Now, let's take a look at Mastercard's stock performance before and after the earnings call. Mastercard reported revenue of $3.8 billion, missed analysts' expectation of $3.95 billion, and its adjusted EPS of $1.60 also missed the consensus of $1.66. As a result, the stock took a beat on the day of earnings announcement. Lastly, here's the latest summary of analyst ratings of the company. Currently, there are 39 analysts covering Mastercard, and most of the analysts gave the rating of buy, although we see in December several analysts upgrade their ratings to buy and strong buy. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.